Thanks again to Skip. Great, very interactive, and that's how we'd like to keep the next session. So let's keep the ball rolling. Staying on kind of the same themes, I'm pleased to introduce both a partner and a customer to the stage. So let me start. Richard Damp, who I've known for a long time from MSG Global Solutions, along with Tim Wiggs from AFLAC, and I think they're going to take us through the next session. So appreciate your time. Let's all give them a warm welcome. Thanks, Tim. Appreciate it. Cheers.
All right, welcome everybody. I hope you're enjoying the event. Just want to thank our sponsors, SAP and Pioneer. I think they put together a really great event. As you heard, my name is Richard Dampf. I'm a managing director with MSG Global Solutions. MSG has a 30-year partnership with SAP, and we actually co-developed PAPM, which is the solution that we're going to be talking about today. My background's banking, finance and risk on the business side, and I'm really pleased to be here on stage with Tim Wiggs, who's the manager of FP&A at AFLAC, and today's topic is going to be how AFLAC improved or transformed their transfer pricing process with SAP profitability and performance management. So Tim, please tell us a little bit about yourself.
Like I said, my name is Tim Wiggs. I work for AFLAC. We're a insurance company out of Georgia. I'll tell you a little bit more about that. Like you said, I stepped down. I'm the senior consultant right now in charge of the implementation of PAPM. I was a lead on the transformation project and saw it through its completion and very pleased with it. I'm going to tell you a little bit of story about what we've gone through. All right.
Okay.
I'll sit a little closer to you.
Yep. So Tim, if you could tell us a little bit about your firm and what AFLAC does, that would be great.
First of all, a little disclaimer here, I'm not selling insurance. So my disclaimer, I'm not going to sell you AFLAC insurance. But who is AFLAC? We're a Fortune 500 company. We've been protecting over 50 million people worldwide. We're founded in 1955, like I said, in Columbus, Georgia is our corporate office. We've been insuring two of the largest groups of markets, the United States, and we're also in Japan. As you can see here, we have a listing of all the products that we have, accident, dental, and which our flagship was cancer. In 1955, we started the whole thing with a cancer insurance policy. So, like I said, for more than 6 decades, we are not a major medical. We're a voluntary insurance company that we give money to the insurers, not to the providers. So we help you during your financial stress. So if anybody has not heard of AFLAC, I'm sure you've seen this little friend. I actually brought one of them with me. I got my little buddy here. So he'll help me also. The AFLAC duck. So if I squeeze him, of course, you'll hear the AFLAC. But since January the 1st, 2000, the company identified with our brand here, the AFLAC duck, and I'm sure you've seen them in all kind of commercials featuring the duck. If you want to find out anything else about AFLAC, we have www.aflac.com.
Okay. So Tim, what caused the need for change? Let's start with a background on U.S. financial operations.
Good question. So, like you said, I work in U.S. operations. The U.S. operations team is responsible for producing the transfer pricing that is used for budgeting, forecasting, and also all of our actual reporting. We calculate the transfer pricing between all of our entities for actual budget, and we also now do a 5-year plan. So transfer pricing occurs for both domestic, and like I said, we also do Japan, and which we make sure that we are in compliance with all the intercompany agreements. So everything that we have is documented. All the calculations are tested to make sure that we're staying in compliance. The reason we've had a need is we've had several small companies or blocks of business that we've purchased over the past few years, which has caused us to have our complexity in our transfer pricing. And I'll talk about the old system, and you can see why we needed a change. So to facilitate our transfer pricing, what we do, we have about 1,200 call centers. And we send out call center surveys every year to find out what are you doing, how are you supporting other entities, what is your agreement, what are you doing with other entities, and what is your shared services.
So Tim, let's let's talk about what the before looked like with transfer pricing, maybe from a process perspective.
Okay, so there was a need for a change. As you can see here, before PAPM, our transfer pricing system was an Excel-based calculation. We had only a few companies. So it was easy to calculate transfer pricing in Excel. We linked multiple files, multiple tabs, and the only problem is we had a limited amount of detailed reporting. And if anybody ever wanted to see what's the results of the reports, we had to go in and do a calculation again to get the results. It was very time consuming, and it was challenged to meet all the deadlines because it took for a long time to calculate. And like I said, if anybody knows Excel, once you put a calculation in, you got to make sure that calculation is correct. So all the calculations, every time you calculated something, you had to review and validate your numbers. So this is kind of a process map of our transfer pricing. We do pull it. We are an SAP company. We do pull our stuff from the general ledger out of SAP, and we layer in some other things such as HR-related items to get a fully embedded cost center. And then we take the information from those surveys, which before it was in SharePoint. And so we pulled the information from SharePoint, we calculated an overhead rate, got a complete cost, and then bumped it up against the percentages as far as how much was allocated to each company. From there, we created Excel-based invoices and sent them to each of the companies. So very slow, very manual, very time-consuming.
Got it. So what were some of the pain points you encountered with the previous process flows?
Okay, well, first of all, as you see, there was the way we did it. This is one of the biggest pain points.
Yep.
Everything was combined together through index matching, through VLOOKUPs, through some kind of formula. But the big pain points we had in the previous process was, again, it's spreadsheets. It contained many sub-sheets, tabs, and they were linked together. It was a limited available information. You made a lot of errors. If the calculation, if you're pointing to the wrong place, you're bringing back the wrong information. Of course, if you keep adding and adding and adding to Excel, it slows down. Yeah. It gets very slow. The ability to store data, if you ran this period and you ran next period, that's a different file that's saved. And in order to do a comparison between the two, you had to do another lookup or a VLOOKUP to compare the two periods together. So it was constantly checking on the calculation, too many spreadsheets, time consuming, lack of automation. And one of the things is with like Excel, only one person can be in the file at a time. So therefore is a key man risk. If that person, something happened, if he's in the middle of a calculation or if he changed something in file A and didn't have file B open, the links weren't automatically there. So once again, time consuming, the limited of, since it was very time consuming, we only did it maybe once or twice a year. I think we did it based off a plan, and then we did like a mid-year true-up. Okay.
So what's changed since the previous process flow, and maybe let's start with the new process flow.
Well, same process. As you see, we have the same thing. We have SAP that's pulled. We have the same HR files that we have people that automatically feed it into our ADSOs. We have now Pega instead of SharePoint, which the survey process is done in. So you have the workflow of Pega, and that automatically feeds into our PAPM system. Now all we have to do is layer in a parameter file. That parameter file drives everything. It calculates the overhead, and it does all the calculations of the invoice pricing, and it also creates our invoices for us. The good thing that we also built in there is we also calculate PAPM now monthly. Now that we can do this, we don't have to do it based off of budgeted dollars. We do it based off actual dollars. And now we accrue, and so PAPM actually gives us the accrual journal entry for us. So we actually accrue and then invoice the following month.
So how does that,
So as you can see here, it's
Yeah.
all joined automatically in PAPM in just minutes. So instead of taking a week or so or days to calculate, we do it in minutes. Since we've already tested the numbers, since we already trust the numbers, it's easy to report the numbers.
okay. So I guess we're going to see how it translates to the new calculation.
Yeah, so this is, anybody who has dealt with PAPM before, this is the actual engine of PAPM right here. I don't speak this language. I'm an end user.
I do.
This is our MSG greatest bunch of consultants that came in and helped us build this. But now that they've helped us put this together, they've actually trained our COE team that if we have any type of anything that goes wrong, they can fix this in the back end. So this is everything, all the joins, all the calls of the ADSOs, and everything that's pulled out of PAPM. We have it dummy proof. This is what we see.
Yeah.
We have buttons here that you press that does all the work for us. So as long as all those files are out there, you press them, it loads the data. That takes, I think, 30 seconds. The second button you press, and then it goes to the base member. Remember those cost center allocations? It allocates it down to those base member allocations. And then it runs, the third button runs the actual calculation. After we run the third button, then we have now reconciliation reports to make sure everything reconciles. We have unallocated reports. So if something kicks out, if we don't have a cost center that's in our PEGA system, it'll tell us that you don't have the cost center there. So it tells us everything that we're at 100% allocating the cost out. So therefore, after we agree upon the numbers, and here's the good thing about it, now that the system runs in minutes, if we don't agree upon the numbers, we simply go back and run again. Change the input data and run again. Once you've run the system, then you agree upon the numbers of what you want to report, then we save it to a history cube so that we can report on it in a later down in time. So this is kind of what kind of reports that we get out now. This is kind of showing you that company A, and the first column there, say company 1000, it allocates to all these other companies, and these are the dollars that are associated with it. We have a before markup, we do a SLA agreement markup where we mark up a certain percentage, and then there's the final amount that we invoice. Well, most of our entities will say, okay, what does this mean? So how do I know this is right? So what we also have out of PAPM, and this is, as you can see, this is an analysis for office. It's still Excel. We just call up reports, and you can drag and drop, add layers, and do whatever kind of reporting you want. And you see that line I have circled there. It's a small amount, but you can see everything that makes it up. You can see all the cost centers that are allocating time to company 2600 on behalf of company 1000. You can see all the direct cost, the layered in cost, the overhead cost, and then the allocation methodology. If you want to allocate it based off a stat key figure, if you want to allocate it based off head count, a fixed percentage, whatever the method is, it shows them what they agreed upon. So you have a lot more at your fingertips.
Absolutely.
You have a lot more drag and drop. You can add more data. You can slice and dice it however you want, since it is an analysis for office.
So that seems like a lot of significant change. What are some of the benefits coming out of PAPM, and what's new?
All right, good question. So our benefits is, like I said, the ability to retrieve and process data from any source. We can run it against budget. We can run it against actuals. And like I was telling you earlier, it was taking us a long time to calculate, let's say. And now one good testament is this past goal plan processing. We got a pivoting change. They wanted us to make a change to something, to their budget. We ran it, validated it, reconciled it, and loaded it in 2 hours. So that's going from the ledger into PAPM, from PAPM back into our budget system and loaded budgets. So going from days and one person doing it to a team can do it now. But like I said, all you got to do is, as long as all the information is out there, as long as the ADSOs are correct, It takes 8 to 9 minutes, 10 minutes to calculate, and then the rest of the time is more validation, just to make sure that, you know. And now we also have, like I said, a quick turnaround. And then, like I said, the one thing that we like about it is we trust the calculation. Since we agree upon the calculation, we've tested the calculation, and we can run this in the lower environments in BHD. We can run it in test environments. We can run it in production against budget, against actuals. We can do it against GAAP, or we can do it against STAT. Whatever ledger we want to pull in, we can run allocations through it. Like I said, we have the reconciliation now that we didn't have before, and we have the unallocated reporting that we didn't have before. It tracks all the actions. So for future reconciliation, if you want to get back to something, you can easily do it. And then, like I said, the easy drag and drop, so you can slice and dice it however you want. The one thing that we didn't have before is we just did that allocation, and everybody, okay, it's allocations. Now we have the provider recipient report. So now during our budgeting process, we have enough time to send it out that everybody stacks hands and agrees that company A is spending that time on company B. So if they don't want to, you know, they want to say, you know, you don't, then we can go back and recalculate it based off of a different percentage. Right. So we also have the detailed reportings, and this is the good part. Now that we have everything stored in the history, we can compare January run with February run. We can compare January run with January run of last year. So as any one of the things that we have saved out there, you can run a report against it. And like I said, the historical data stored, that's the great thing. So you don't have to pull up an Excel spreadsheet and compare it to an Excel spreadsheet. Everything's stored in the same location.
That's great.
So you did ask already what's on the horizon. So
yep.
Transfer pricing was our first embedded tool that we built. But since then, we've already put in 4 different modules. If anybody knows anything about insurance accounting, we did the transfer pricing. We also do functional allocation. We allocate things to a function so that we can give information to our actuarials on acquisition versus maintenance. That in itself, with the old system we had in SAP, it's a funny story. We would press a button, go home at night, come back and hope it finished the next morning. If it kicked out or something had an error, we had to wait the next night and run again. Now it runs in 10 minutes. So going from overnight to 10 minutes, and if you stayed there, you had to keep hitting F8 for it to recalculate. And so now, like I said, if you have errors in our function allocation system, we can do it, run it again. Like I said, it's only a 10-minute calculation. We have the ability now to do allocation, since PAPM will do a lot of calculations. Mm-hmm. We can do up to, like I said, we got 3,000 different rules that we run through it. So if we want to do allocations, however we want to do it, PAPM actually does the calculations for us. And that's the PEGA information that I was saying earlier that we layer inside of the survey system. We also have now implemented the ability not only to allocate it to a function, but we can actually go down to the policy level. Since now we have the ability to calculate faster, we can house more data, we can allocate it to a lower level. So now we can see by product, we can see by group size, we can see by channel, whatever we want to look at. We can look at transfer pricing at any cost. We can look at full P&L, which is another model we put in. We can look at full P&Ls by group size, by channel, by product. So we can see what products are making money, what products are losing money. We also put in a unit cost calculator so that we give the unit cost information to our actuarials. We used to do it on a yearly basis. Now we can do it on a monthly basis because of the fact that we can turn over the information a whole lot quicker. So that is kind of what we've done at AFLAC. We've saved a lot of time. That's one thing. Yeah. PAPM will crunch numbers quickly, and it houses a lot of data. So now, okay, I got a couple questions for you.
Well, first of all, thank you for the insight in how AFLAC is using PAPM for transfer pricing.
Okay, my pleasure.
Go for it.
All right, so my question is, we've talked about AFLAC. what AFLAC's doing and everything, and we talked about insurance companies, but what are some other companies or what are some other uses of PAPM in relationship to the SAP and the ERP system?
Great question. Okay, maybe one more. Okay, so let's step back a little bit. PAPM is a high-speed calculation engine that ingests data from SAP and non-SAP data sources. It operates on HANA, which is an in-memory capability, so it virtually reads data and can process very high volumes in minutes or seconds. It started out within financial services with an insurance company in Asia, and they were using an Oracle database. They were supporting 5 million monthly transactions, and it was taking them a week to turn around. So PAPM was purpose-built for that type of situation, and it was created within financial services, but has also expanded across all industries. But just want to talk about one of the scenarios that is used most frequently. So we have a lot of high visibility customers, including name customers in Silicon Valley, US telecom customers who are actually using PAPM to complement their finance transformation. So whether it's ECC and your legacy system, or if you're en route to a finance transformation through the SAP RISE program, that being S4 or Central Finance, PAPM is very complementary, in particular for universal allocations. So a lot of our customers are using their core ERP for simple processes and standard data elements, or for basic cost center and profit center allocations on actuals. But you can see on the right-hand side, for very complex modeling, for very high volumes of data, for a lot of reporting complexity, when data is needed outside of your core SAP ERP, for planning allocations, for different types of any allocation methods, any transfer pricing methods, if you want to use custom objects as drivers, for simulation purposes, and all of the use cases that come with PAPM out of the box, and we're going to see a few of those shortly. But this is how many of our customers are using PAPM. And if you're familiar with the SAP RISE program, Prepare, Move, and Run, we've been working with SAP to validate that a lot of our consulting firms and SIs can be recommending PAPM as early as the prepare phase. And we're going to speak about that shortly. But maybe we can go on to the next.
Yeah, so tell us about those use cases for banks.
Sure. So up at the top, you've got 6 different use cases. They're the most popular in financial services, but frankly, they're used across any industry group, whether it's telecom, utilities, life sciences, and so forth. Let's start with profitability analysis. As long as PAPM can get access to the granular data, it can provide multidimensional profitability at any levels, whether it's product, whether it's customer, product, channel, instrument, event, and so forth. You can slice and dice your data along any dimensions in high speed. Cost and revenue allocations, that's sort of a subset of profitability analysis. PAPM supports any methods of allocations, direct, indirect. You can use any drivers, cross-company allocations. PAPM also supports delta or iterative allocations, which I believe you were talking about. So you don't have to wait until the end of the month to run your allocations. You can run them iteratively at any point, whether it's month to date, quarter to date, year to date, and so forth. In terms of business planning integration, we are tightly integrated with SAP's SAC, Analytics Cloud. And we fully support top-down, bottom-up planning integration, where you're just working in an SAC dashboard during all your planning. You literally press a button. The results in SAC get pushed into PAPM. PAPM is then calculating on hundreds of millions or billions of records and returning the results back into an SAC dashboard in a different type of dimensionality or hierarchy. So it's instantaneous feedback for planning purposes. What if simulation, that is essentially with every use case. With PAPM, you can create as many different versions of your data as you like and run what if analysis side by side in real time to see what the differences might be. You can also use macroeconomic factors. You can just make simple changes to expenses or driver tables. So it's really, the possibilities are limitless. Tim already told you about transfer pricing and how it worked in AFLAC. Let's just focus also on tax compliance on reporting. So we have out-of-the-box sample content that we've developed based upon all of our history working with customers and partners. The two that I'll mention, corporate income tax calculation and reporting, CIT, but the other one is BEPS 2.0, base erosion profit split. This is where any multinational entity with $750 million in revenues has to pay their fair share of taxes globally. And that includes 15% tax in any jurisdiction that they do business. So the requirements by the OECD are not only do you have to have a methodology, but you have to have a solution to support all this, and also including the auditability and transparency and traceability. If we look more specifically below the first row, we have all of the industry-specific use cases. I know we don't have a huge amount of time, so I'm going to just mention one or two. For example, funds and liquidity transfer pricing. So this is essentially a treasury function where you're matching sources and uses of funds, and you're trying to find out what your profitability or margins are attributable to the different departments that contribute to your treasury function, you know, from the lending units to your borrowing units and so forth. PAPM supports any methods of transfer pricing, curve creation, cash flow generation, simulation, and fully loaded P&L at an instrument or an event level. Sustainability, that really applies to both banking and insurance. PAPM happens to be the calculation engine that is powering SAP's sustainability solution, which is a sustainability control tower. So that's something else that we offer. And you can see on both sides, whether it's banking and insurance, there's a significant number of use cases that PAPM is applicable to.
All right. Next one. So common scenarios where you deploy?
Sure. So let's start out with the one that I think we talked about at the beginning. PAPM can be implemented either on top of, say, ECC if you're not ready to do your finance transformation to S4 or central finance. And it's essentially, it can also be used to replace custom scripting or very IT-intensive solutions. And it could be essentially a sidecar in advance of a full finance transformation. The second bullet is, in fact, the finance transformation. That was the first slide that we shared, where PAPM is complementing S4 or CFIN for allocations or transfer pricing. The third bullet, PCM. PCM is the legacy profitability solution, which is going end of life. We have built an accelerator which helps companies migrate their PCM models to PAPM. So that's another nice capability. And you can see some of the other SAP solutions that were mentioned during the keynote. So PAPM integrates with FPSL, FSRI, and so forth. In financial services and IFRS 9 and loan loss provisioning, cash flow generation, and so forth. We already mentioned the planning integration. We mentioned the sustainability management, and I believe we also talked about BEPS and corporate tax. Last but not least, predictive. So PAPM fully supports different types of predictive analytics stochastic models, and so forth with simulation. So I'm going to stop there. I see people have to get going. Any questions for either one of us before the session ends?
Didn't allow much time for questions, but
Yeah.
it actually tells us where the errors are, what kicks out, and then since we have everything at a base member, we can go down to that call center and see if that call center, how is it coded? Is it coded incorrectly? Is it coded to somewhere that is invalid? So it kicks out and gives us that unallocated report, and we go directly to it. They do. We do, like I said, we do a survey once a year. So we're actually, that is a drawn out process right now where we do have to build the rules once a year. In our allocation, we just do it once, and those are the ones we use for the next year. And then come June, we'll set down another set of surveys and use that for the following year.
Anybody else?
Yes, ma'am.
Yep.
The connective is all through BW. It's all through ADSOs, where it pulls ADSOs. We put all the information out there, and then it also goes and pulls the information from our ledger, and it joins and combines all of it together and houses it into another ADSO. So everything's housed into an ADSO, so we can report at any process. It keeps the unallocated out there. It keeps the allocated out there, so we can report on it at future.